In China's Manufacturing Purchasing Managers Index came in at 49.3 for July. It has seen an uptake since April, but has remained under 50. See the red dotted line over there? It means China's factory activity has been contracting over the past 4 months. The official non-manufacturing PMI reading, namely China's service industry, came in at 51.5 in July, which means an expansion in service activity, but this is the lowest growth so far this year. In the latest attempt to boost the country's economy, Chinese authorities rolled out 20 measures to boost consumer spending. They include easing restrictions on car purchases, particularly new energy cars including EVs, support for home upgrades and purchasing household appliances and electronics. The government is also encouraging people to spend more on dining, culture, tourism, sports and healthcare services. Boosting all of these efforts in rural areas is also a priority. And Hong Hao is chief economist at Grow Investment Group. I asked whether he thinks the measures will work.
I think it takes time to show. Obviously, the market is excited, at the prospect of, some consumption stimulus, and also, in the past, car purchase restriction removal, and also assistance, in many other consumption areas did help the Chinese consumption to recover. So I don't think this time we will see a different story. So more likely than not, we will see eventually consumption to recover, but it will take some time.
And investors have been expecting some stimulus measures. Do you think these are in line with most of their expectations?
I think the market was hoping for example, some explicit support for domestic consumption, such as consumption coupon or even cash distribution, like the Western economies did during the 3 years of pandemic. I think right now, we're seeing some very broad line, sort of the top level policy statements. It's up to the provincial governments and also local governments to roll out further details in the coming weeks. So I think just now, as we were speaking, there were news about some cities trying to implement the support policies for the property sector. So I think in the coming weeks, we are likely to see more and more such detailed announcements.
And one of the priorities is boosting domestic spending. Do you think the general public now are willing to spend more? A great many are really careful with each penny they spend after the pandemic.
Yeah, I think right now, we're seeing national savings rate is at all-time high. And also in the first half of the year, the Chinese consumer saved 18 trillion yuan, which is like double a full years of saving, in a normal year. So it's really showing that, people are risk averse. They're not yet at a very confident level, to spend the money. And also because of the property sector, it is still trying to recover. Right, so therefore, credit expansion is not really as strong as it should be at this stage of the economic cycle. So I think time will tell. But obviously, once the consumer confidence comes back, then I'll be surprised to see them, spending the money.
And speaking of China's property sector, are we seeing a change of tone here?
There is certainly a change of tone in the stock price. I mean, many of the property developer stocks has been doing really well, right? So, it's up 20%, 30% plus in a day. So we haven't seen this kind of stock price surge for a long time now. Many people may have already given up on the sector, but now, precisely at this juncture, the property stocks are coming back to life. I mean, they're coming back for a good reason. I mean, obviously, we're seeing the Politburo meeting not mentioning about, houses not for speculation, it's for living. So it's a signal that the policy curbs will be eased from here onwards.